I'm Brian Scott-Smith and you're watching World Risk and Insurance News. In this programme, debate over insurance bans on Iran oil. The IMF bails out Greece. A closer look at US tort reform. And Elliot Lane reports from London.
In an exclusive interview, I will be talking to David Ruffley MP, member of the powerful Treasury Committee.
All this and more from the online video news network for the global insurance community. We begin with a look at international news affecting the insurance industry. EU diplomats are debating whether some insurers should be exempt from sanctions placed on deals with Iranian oil shipments. This following objections raised by Asian oil importers affected by the ban. EU foreign ministers meet on March 23rd to further discuss sanctions, but at the moment there appears to be no consensus on how to move ahead. Good news for Greece. The International Monetary Fund approved its contribution to the latest Greek bailout package. Here, Jerry Rice from the IMF explained details of the agreement for the media.
This morning, the IMF's Executive Board approved continued support for Greece's ambitious economic programme. The Board agreed new financing of €28 billion over the next 4 years. This financing is part of the overall package of support from the IMF and Greece's European partners. The Board stressed that Greece's continued reform efforts to improve competitiveness and restore economic growth will be key in overcoming the crisis.
Meanwhile, according to Eurostat, the Eurozone posted a bigger trade deficit in January than analysts expected, though exports rose for a third straight month in January, providing some hope to the European manufacturing sector. And now Elliot Lane joins the World Risk and Insurance News team with an exclusive interview with David Ruffley, senior member of the UK Parliament's Treasury Select Committee. Here are highlights of that interview.
Is the UK economy truly improving?
Growth is flatlining. The last quarter of last year, well under 1%. Even the latest unemployment figures still show 8.5% in this country. That's way too high. And we need some adrenaline shot into the UK economy.
The European Central Bank has said that the euro crisis is over. Do you believe that it's truly over?
The euro has got a stay of execution at the moment. Greece is the sick man of Europe, and there's nothing in the haircut that bond holders have received in the last few weeks that suggests they're going to be delivering the Greek state their share of the bargain. They're a sick economy. Their competitiveness, no signs of that improving. So I think in the next 12 months we have got some stability. I think that whole continent now has got to worry about long-term structural reform. The trouble is its leaders are not doing that.
Aviva has committed itself to the UK, unlike Prudential, which still threatens to re-domicile its headquarters to the Far East. What would you say to any insurers thinking of leaving the UK? Is it worth staying?
Insurance in this country is something that we're a world leader in, and Aviva have particular reasons because of its strong domestic footprint here, but Prudential are footloose, as indeed are many insurance companies. The Far East is great space for them. Unless we start getting corporation tax rates down, seriously down, Britain is not going to be UK tax competitive with the Far East or America or indeed anywhere else that is mature industrialised democracies. We've got to set out a route map to show world-class companies like Prudential, world-class insurers, there are many of them in this country, that this is a great place to do business. We've got to have a budget, this one coming up, which demonstrates a clear route map to lower corporate taxes in the UK.
If you'd like to see more of this interview, visit our on-demand library. And in part 2 of this RIN TV exclusive, David Ruffley discusses the new UK insurance regulatory body and who he thinks should lead it. And now for more of our discussion with Professor Aaron Tversky from Brooklyn Law School, a preeminent authority in products liability and US tort law. Professor Tversky looks at tort reform in the US, and here are highlights from our discussion.
The most controversial subject in tort reform has been the issue of whether or not we ought to put caps on liability. About 10 states have instituted caps on liability for non-economic loss or for pain and suffering. The most significant area where these caps have taken place is with regard to medical malpractice. Juries have got wind of what's going on, and what they've begun doing is raising the ante on economic loss. Now, you would say, well, how can you do that after all economic loss is economic loss? And the answer is that there's always plenty of room. Contingency fees are particularly an American phenomenon. So the courts have begun regulating contingent fees, and especially in class actions or in the mass tort cases. Punitive damages is an issue, although there is a great question whether punitive damages are insurable at all. The United States Supreme Court has gotten involved into this issue as to whether or not the amount of punitive damages is so outrageous that it violates the Due Process Clause. We have been in a period of retrenchment. There's no question we've been in a period of retrenchment in the last 10 years. And I think that will continue.
For more of our interview with Professor Twersky, visit the RIN TV On Demand library and let us know what you think of this controversial topic. That's all for now. I'm Brian Scott-Smith reporting from New York. Join us next time for more world risk and insurance news here on RIN TV.